I bid you all good morning, good evening, and good night. Wherever you be watching this transmission, it is I, Mike Martins. Guys, thanks for joining. And here it goes, guys. A 1.3 trillion U.S. housing market crash is imminent and inevitable. At least in the States, they're calling a spade, with a lot of publications calling a spade. But in Canada, because housing is so heavily dependent on its economy, like heavily dependent on its economy, whether it's through fire, through real estate insurance and all that stuff, or if it's from construction and anything that leads up to the construction, it's so heavily dependent. So is Australia, New Zealand, and the UK. But in the States, they're calling a spade and starting to kind of look at the cards right now that the average house in Arizona after 2008 went from 126,000 to 280,000, and that's beyond affordability now. Portland, Oregon, we covered this on Trends in the Housing Market. The average home went from 198,000 to about 400,000. So Oregon, a lot of foreign investing coming into the West Coast, completely pushed people out into other states. Right? Look at Seattle. After Vancouver implemented the foreign buyers tax in Vancouver, a pile of investors and real estate agents went down to Seattle to tell them, hey, we got investors that will come and buy properties up and gobble them up like crazy and not even come to your country. They'll just buy them up and hold them and leave them empty. And you saw Seattle housing prices on average going from 285, 310 to like 5, 6, 700,000. So all the locals, all the way up from the top to the bottom of California, completely migrate east. Wagons east. Wagons aren't going west anymore. They're going east now. And it's been happening for the last 3 to 5 years now. California's been a little longer, but Oregon and Oregoners and Washingtoners usually stay put. They don't really migrate anywhere. They're the furthest west you could go. After that, it's like you follow the ocean, you go to China, right? So, yeah, it's just the furthest west you could go, and a lot of them for decades in family history and roots have stayed there for some families up to a couple of 100 years. But it's changing. People moving back east or into the interior of the United States because they just can't afford to live in their own cities they were born and raised in. But things are coming to a change there, especially in the U.S., and U.S. isn't scared to call it. So there's many articles out there now, today and yesterday. U.S. housing market could lose over $1 trillion in value this year as COVID pandemic rattles the economy. U.S. housing demand is expecting to plunge as the COVID pandemic continues to unfold. The U.S. housing market could lose 4% of its value. That's huge. But people are thinking, well, Mike, I live in Florida. I bought my house last year for $275. If I lose 4%, that's eight. That's like $9,000 loss. I'm not too worried, Mike. No, it's the people that live in California or San Francisco that bought a house for $1.2 million, and it's realistically market value is probably worth $690 on a good day. That's when you start losing huge cake. Unemployment claims and layoffs would be a headwind. Demand is expected to fall off the cliff thanks to COVID pandemic. The U.S. housing market is going to be one of the biggest victims in the novel coronavirus pandemic as people lose jobs and the economy comes to a grinding halt. Housing bulls have already started pulling out of the market, and it won't be long before prices start to go south. The latest readings from the S&P and CoreLogic Case-Shiller Index could be the market's last hurrah. The economic fallout of COVID outbreak is about to wreck the market's momentum and might cause the biggest price crash since the Great Recession. So again, a lot of American housing, I think close to 87% is still tied to wages. So you go to Idaho, you can still pick up a house for like $179, a 4-bedroom, because it's tied to wages, right? So that's why Canada lost a lot of its professionals, thinking, I'm a doctor in Vancouver, I make $90,000 a year, I take home $60, I could barely afford to rent an apartment, but if I move to South Carolina, I can make half of what I make, but take home more because I'm taxed less. And the average mortgage payment there is around $400 a month. So that's why we're losing a lot of our professionals, the great Canadian brain drain. The housing market got off to a great start in 2020 as prices growth accelerated across the markets. The head of index investment strategy, S&P Dow Jones Increases, wrote, as has been the case since the mid-2019, after a long period of decelerating price increases, the national 10-city and 20-city composites all rose faster rate in January than it had done in December. Housing prices were particularly strong in the West and South, and comparatively, weak in the Midwest and Northeast. Let me zoom that in so I can see. But other analysis predict January's gain may be the last one of the housing market sees and economic fallout of COVID takes hold. We expect a peak to through fall in prices around 4% by early 2021. The value is then flattening out for the rest of the year. Housing demand will see a sharp decline as unemployment hits record highs. The housing and households are prevented from buying a home due to the shutdown of large parts of the economy. Poynton goes on to add that buyers won't be willing to pay up for a house that will be lent to a lower pricing. So who's going to buy a house that you're going to end up having to owe more on it later, or pay more for a house that's worth less than what you bought it for? That puts you underwater, right? Nearly $1.3 trillion of value could be wiped out, according to data from Zillow. The combined value of residential housing in the U.S. increased by $1.1 trillion to $33.6 trillion in 2019. If home prices drop 4% through the early 2021, Poynton estimates the housing market could end up losing $1.34 trillion of its value. The conditions for such a crash are already in the making. The number of Americans filing for unemployment benefits spiked a record-shattering 6.6 million for the week ended March 28. So here it is. Goldman Sachs expects a deeper contraction in second quarter wave as mass unemployment. So here it is. You see the contraction here. So they're seeing an uptick in Q4, I guess. Yeah, Q4. And Q1 of 2021 and plateauing off and going down in Q2 of 2021. These numbers are bad news for the U.S. housing market. They are a precursor to the layoffs and the novel COVID pandemic could bring. The St. Louis Fed estimates that as many as 47 million Americans could be out of a job. That this translates into alarming unemployment rate of 32.1%. As a result of demand for housing expected to fall, one estimate predicts 35% annual drop in sales. This spring, COVID rattles the market. U.S. housing market bubble is bursting as sales plunge. So I think I covered this story. The U.S. housing market is in trouble as sales headed south. Massive unemployment is expected to derail price growth. Key players are already pulling out. So here it is. Big-time players are pulling out, and buyers are escaping the housing market. Real estate marketplace Zillow has suspended purchasing new homes on an account of the COVID outbreak. The company directly purchased homes from sellers in 24 markets through its Zillow Offers business arm. It resells them after making repairs. A lot of, not a lot, but a few Florida real estate investors went over to China to advertise apartments in South Beach and Fort Lauderdale, and they were getting very successful. Actually, they were getting very successful attracting Chinese buyers in China. A lot of them weren't going to America. They just wanted to hold on to properties and leave them empty like in California. So that was going well for a couple of months from September, October, November, December. Then it kind of fell apart with COVID, and now sales in Florida are going flat. They were upticking to foreign investors, and then because, like I said, a lot of the real estate agents went to China to sell out their country to foreign investors for foreign money, right? It's all about the dollar, right? COVID job losses could total 47 million. Unemployment rate may hit 32%. Fed estimates. So here it is, guys. Look at those lineups for bread, soup. Who knows, man? Let's see if that was in the other article. Yeah, it's pretty much what the article was saying. Let me know what you guys think in the comments below. Guys, don't forget to set your, if you don't mind, guys, I would like for you guys to set your, yeah. Thanks for the views, guys. I'm getting more views. Revenue's been set up on the channel. Revenue's going up. Not much. It pays my internet and part of my electricity bill right now. Views are going up, though, and those subscriptions going up, too. I really appreciate that. Don't forget to set your reminder here for trends in the housing market, and don't forget set your reminder for Mike in the Night, Save a Prayer for Me Now edition. We're going to have people calling in from all over the Commonwealth. Like last week's show, guys, if you want to tune into this Mike in the Night here. This episode was really good. We got callers in from New Zealand, Australia, nothing from the UK, New Zealand, nothing from the UK, and then we got callers in from Canada and the United States, giving us the psychological impact of COVID and how it's been psychologically affecting people and their businesses. Let me know what you guys think in the comments below. Thanks for watching. Thanks for supporting me on Patreon, guys. And thanks for people shopping on Teespring. I really appreciate that, guys. It means a lot to me. Thank you so much.